all the stocks that are buzzing in trade either on the back of news flows or on technicals. And now on technicals, we are seeing Rudramurthy joining in with us this afternoon as well. Rudra, thank you so much for joining in with us this afternoon on Market Fatafat. It's always a pleasure having you on the show. And let's talk about your first stock today you picked out for us is Hindalco. Sumit a short while ago also had Hindalco on the chart, so surely seems like it's becoming all the technical analysts' favorite stock. What is your view on Hindalco now?
Yeah, thank you so much for having me here. Hindalco for me has given a clear breakout above levels of 450. At current level, the stock is giving you a great risk reward to buy, headed towards 500 initially, and it can eventually go higher towards 600 for a medium to longer time frame. So I will be a buyer in Hindalco at current market price, available in futures also. Keep a stop loss of 440 and look at targets of 500 initially, and medium to longer time frame stock can head towards 600.
All right, moving on then. RPG Life Sciences is another stock that is in focus on the back of its quarter numbers. Ashesha, tell us what is the report card reading for the counter?
Yes, very strong set of results, and that is what the stock is reacting to. It is slightly off the highest point of the day, but despite that, holding on with gains of nearly 3.5%. Revenues for the quarter gone by saw an uptick of 14%. Margins too have expanded on a year-on-year basis. Company reported margins at 21.8% versus 21.6% that the company reported same time last year. Profit after tax has come in at 22 crores, indicating an uptick of nearly 22% on a year-on-year basis. So yes, very strong set of numbers. The stock is off slightly from the highest point of the day, but holding on with gains of over 3.5% as we speak.
Okay, surely keeping an eye out on RPG Life. But let's move on and talk about Emdra, another earnings candidate that is in focus. And what we are seeing in terms of revenues, a strong growth of around 53% is what we are seeing coming in on a year-on-year basis for the company. Revenue came in at 80 crores versus 52 crores last year. Net profits of the company also seeing a growth of around 12%, coming in at 16 crores versus around a 14 crores profit is what they reported last time. In terms of the operating performance, yes, we're seeing a bit of a decline coming in the EBITDA margins of the company. 29.8% versus 39.3%, so around a 900 basis point contraction in terms of the EBITDA performance, EBITDA margin of the company. But on an absolute basis, when you look at the EBITDA, that's seeing a growth of around 15%. Keeping an eye out on this one, margins is something doesn't seem like that has excited the street, and as of now, the stock is down almost 7% in trade.
All right, moving on then. Hospital stocks are also in focus like Max Health and Apollo Hospitals, but that is on the back of a note that has come on from Macquarie. Now, according to Macquarie, they are cautious on the hospital sector in the medium term. Now, they feel that the peak performance is being rewarded with historically high valuations, and they see further growth is largely tied to capacity expansion, and they feel that the most companies are expanding bed capacity significantly. However, there is underlying weakness in the demand itself. Now, they also feel that there will be softer demand and capacity expansion that will be driving down their profitability, and the regulatory overhang is an additional downside. Now, Apollo and Max hospitals are trading at significant valuation premiums to their peers, and on the back of that, they have initiated an underperform on Apollo hospitals with a target price of 4,200 rupees per share, and on Max Healthcare, they have initiated an underperform with a target price of 465 rupees per share.
Surely keeping an eye out on both these hospitals' names. But let's move on and talk about an aviation name, and that is going to be on the technical front. And Rudra, you've picked out Indigo for us. What are the charts now indicating for Indigo? First, we've seen a bit of a run up. In the last 1 month, subdued moves is what has come in for Indigo. Is it the right time to pick up Indigo now?
See, Indigo is one of the aviation stock doing fabulous, and also post-COVID, a lot of people have gone for this revenge trips and tour, and that is helping Indigo fundamentally to do great, which is clearly reflected even on charts. For me, Indigo has strong support at levels of around 2,500, and it's a buy on every dip. Available also in F&O, one can carry long position, keep on rolling it over, and I am looking at initial targets of 2,700 to 2,720 to come on Indigo, and after this move, if stock can even trade and close above 2,720, 730, which has been its resistance for a near term, stock is headed towards 3,000 also. So at current market price, I will be a buyer looking at initial targets of 2,700, and once it closes above 2,720, 3,000 is possible on Indigo. Have a strict stop loss of around 2,530, and one can go long even in futures. Indigo is a great stock to buy at current level.
All right, a great stock to buy at current levels is the word coming in for Indigo. But moving on, Glenmark is another stock that is in focus on the back of an inspection. Mamakshi, tell us what is the news flow that is really, weighing the stock?
Well, yes, an announcement has come in from Gland Pharma. Now, keep in mind that the US FDA had conducted its GMP inspection at VSEZ Sterlite Oncology facility, and this is located in Visakhapatnam. And this inspection was conducted between 20th of July to 28th of July. And the company has now announced that the inspection was concluded with 0483 observations, and as a result there has been a classification of no action needed. So this is a positive news flow for Gland Pharma, and as a result we are seeing that the stock is gaining momentum in the trading session today. As of now, the stock is trading slightly off the day's highest point, but nevertheless up nearly 3% as we speak.
Okay, surely keeping an eye out on that one. Let's move on and talk about Deepak Nitrite then. And on the charts, Rudra, what is the view for Deepak Nitrite? You know, it's not been very exciting in terms of returns when you look at it. Last 6 months, 8% return. Before that, seemed like a bit of a consolidation. So now what is the view coming in for Deepak Nitrite?
Yes, for me, Deepak Nitrite is a good buy at current market price. As you clearly told, yes, this stock has seen correction from levels of 2250. But if you see the correction from 2250 till current levels, there has been no volumes at all in the fall. So it has been more a correction without support of volume, and now strong support is at around 1900 level. At current market price, if I am buying with a stop loss of 1900, that offers a great risk reward for me to buy at current market price, and I am looking at initial targets of 2130 and eventually 2250 from where the stock corrected. It can completely retrace that entire fall, and I am looking at stock to even go past 2250 with a strong support at 1900. So at current market price, I'll be a buyer. Keep a stop loss below that strong support area of 1900. Look at initial targets of 2130 and 2250, and eventually once it crosses 2250, stock can even go towards 2500. So chart patterns very positive, great risk reward to buy at current level.
Okay, great to buy at a risk reward at current levels is what the word is coming in on for Deepak Nitrite. But let's move on and Cocoyo, Cameron, that's the stock that is in focus on the back of a strong set of numbers that was reported by the company. When you're seeing the revenue, saw a growth of around 20% coming in on a year-on-year basis. Revenue stood at around 236 crores, while in terms of the profits of the company, what a jump that we've seen there, right? 18 crores is what the profit has come in at versus just 8 crores last year, so almost up 121% when you look at it as well. So strong growth in terms of the profitability of the company, more than doubling there in terms of the profits of the company. Margins also a strong expansion there, so operating performance was also quite strong because EBITDA margin came in at 10.3% versus 6.9% last year. So 300 basis point, more than 300 basis point expansion in terms of the margins of the company. Operating performance obviously was strong, and EBITDA saw 78% growth as well. So strong performance there from Cocoyo, Cameron, and that is why the stock is up almost 9% and almost 10% actually in trade as well.
All right, moving on then. Rudra, Manapuram is another stock that's on our radar. Now the stock has already given a return of almost 20% in the last 6 months. Now, what should an investor do? Should we hold on to where we are, or what is the chart reading for this particular counter?
See, for me, Manapuram is clearly making that signals of rising top and rising bottom formation, and it's a classical chart pattern where you have also seen a breakout at levels of around 134, 135, and now earnings also expected to be good from Manapuram. I feel any dip to levels closer to 135, 136 will be a great buying opportunity. Even at current market price, I will be a buyer in Manapuram, looking at initial targets of 160, and eventually stock can even move towards 180, 200 level. So a great risk reward at current market price to buy at around 138, and on dips to 135 accumulate more. Keep a stop loss of around 130 and look at targets of around 180 to 200 to come on Manapuram.
All right, moving on then. The next counter in focus is MCX. MCX has declined as June quarter profit has slumped 53% on the software cost. The multi-commodity exchange of India has, declined after the company reported a 53% year-on-year drop in net income for the June quarter. That was dragged by a sharp surge in its spending on software licenses. Now, the share has fallen as much as 2.1%, most since July 13th. Now, for quarter one, the company has reported a net income of, 20 crore rupees versus 41 crore rupees on a year-on-year basis. The revenue also rose 36% on a year-on-year basis to 1.5 billion rupees, while the total cost has more than doubled on a year-on-year basis to 1.4 billion rupees. Now, the company's spending on software and related expenses has also jumped to 88 crore rupees versus the 19 crore rupees on a year-on-year basis. On the back of that, MCX is seeing a decline coming in there.
Okay, surely keeping an eye out on MCX. As of now, recovered from that day's lowest point of that fall of 2%. But let's keep an eye out on this one. Moving on to a private bank, and that is Axis Bank's. Rudra, you've picked out Axis Bank for us on the charts. Now, what is the view that you have on Axis Bank? In the last 3-4 months specifically, we have seen a bit of more of an uptick coming in. Is it still a buy for you? What is the target that you're keeping for this one?
See, for me, Axis Bank is a stock to sell. 990 has been a very stiff resistance. If you compare Axis with ICICI Bank, the charts are completely on the other side. ICICI Bank for me is in fact a stock to buy on every dip. No doubt it has moved up from levels closer to 700 to whatever it is now when it comes to ICICI Bank. But if you see Axis Bank, it is exactly opposite. 990 has been a stiff resistance where continuous selling has been seen in this stock, and lot of supply is coming at that region of 990, 1000 level. And right now the last support for Axis Bank is at around 940 to 945 zone. So if it breaks this 940 to 945 zone, stock can definitely come down very swiftly and even test levels closer to 910, 900 level. So I will be a seller in Axis Bank, or one can do a pair trade where you sell Axis and go long on ICICI Bank. Definitely, irrespective of market, you will make money. And for me, Axis is a sell on every rise, looking at targets of 910. But I will be a conditional seller here. I will sell below 945, keeping a stop loss of 970 for a target of 910.
All right, then we'll stay with the banks then. And Vikas Khemani, who's the founder of Carladian Capital Advisors LLP, believes that the banking sector will lead India's growth story to become a $5 trillion economy. Adds that the sector could give around 15 to 20% returns in the next 5 to 6 years. Let's listen in to what he had to say.
Indian economy is going to do from $3 to $5 trillion. Banking is one of the largest sector which will lead it, right? Good part is that in banking, our balance sheets are one of the best ever. Growth is coming, in a reasonably good proportion. Investment cycle has just picked up, so you have both triggers of investment cycle as well as the retail credit growing, which is a very robust, good situation. So you have diversified growth coming on the asset side, and your balance sheets are very well in place. And given what we have, the credit infrastructure in place in the form of IBC and CIBIL score, I feel that there is a structural repair which has happened to the sector. I mean, we wrote a note on this about a year ago. With this structural repair, I think the worry of NPA cycle, in that proportion, what we saw last cycle would not be there. So to that extent, I feel that this sector can deliver anywhere between 15 to 20% return compounding over next 5-6 years as long as the economic growth continues. Within that, there will be ups and downs and cycles. I'm not saying that, but structurally speaking, this sector is very well in good shape, and can deliver good compounding ahead.
Okay, and keeping it with banks and more banks, and Bank of India, Vamakshi, that one reported its numbers as well. How is the number looking like on the first cut, as well as what is the stock doing?
Well, yes, as of now, the stock is actually gaining in trade, Vinny, and that is on the back of its numbers, like you rightly pointed out. When we look at the gross advances, that they are seeing an uptick of almost 8.5% coming in at 5.1 lakh crore. The yields on advances, more importantly, has improved to 8.1%, and this is in line with the higher interest rate regime. When we look at the deposits, they have also grown by 8.71% to 6.97 lakh crores, and the current and savings account ratio stands at nearly 44.2%. The NIMs, as a result of higher yields and cost of borrowings, have also ended up higher for this counter, but nevertheless the NIMs have actually improved by nearly 49 basis points to 3.03%. Net interest income, as a result, has seen an uptick of almost 45% on a year-on-year basis. PPOP, that is the pre-provisioning operating profit, has also come in nearly 72% higher for this counter. The net profit is also seeing a very sharp uptick from 561 odd crores in Q1 of last year to 1,500 odd crores, and this gain was mostly backed by both the core as well as the non-core business growth, as well as a fall in bad provisions. Asset quality has also improved for this counter. So all in all, a good set of numbers is what Bank of India has registered, and that is the reason why the stock is up nearly 1.5% in trade as of now.
All right, Vamakshi, thank you so much for that. And moving on to Root Mobile, which is the other counter in focus. Ashisha, tell us what is the news flow that is driving the stock?
Yes, this is also an earnings candidate, and the company reported weak set of numbers, but the stock has recovered from the lowest point of the day, and in fact now as we speak, holding on with gains of 0.5%. Revenue saw a downtick of about 4% on a sequential basis. Margins too have contracted. Company reported margins at 12.7% versus 13.1% that the company reported in the previous quarter, indicating a sequential contraction of about 40 basis points. Now, the numbers were impacted this quarter on account of depreciation of the Naira currency, on account of seasonality that the business was impacted by, and also on account of decrease in traffic from some players that were retained in just the previous quarter. So largely weak set of numbers. Realizations too for billable transactions have fallen by about 33% of 33 paise on a sequential basis. Weak set of numbers, but as I mentioned, the stock has recovered from the lowest point of the day.
Okay, let's move on and then talk about Exide on the charts. And Rudra, how are the charts looking for Exide? What is it that you are picking up in terms of a target price that one should keep for this one? We've already seen a 36% return in the last 6 months.
Yeah, see, for me, Exide has been a very good stock, in fact, on the buy side. But this time, the results were not as per expectation when it just came about a day back on last week. And I can also see strong support now for this counter is at around 245. So if we break 245 on Exide, yes, this stock can make a move towards 228, and even it can come down till levels closer to 215. So I will be looking to short Exide with a very strict stop loss, which will be at the all-time high levels at around 255, and looking at break of this support of 243 to happen, and then stock can come down towards levels of around 220 as well as 215. So for very short term, I am shorting this stock with a strict stop loss of around 255 and looking at targets of 220 to come on Exide. However, on dips for a medium to longer time frame, closer to 210, I will be a buyer in Exide. So one has to understand the time frame before you trade. So for a very short term time frame, I am looking at shorting opportunity at Exide, but with a very strict stop loss of 255.
Okay, surely keeping an eye out of that. But let's move on and talk about NTPC. Whereas NTPC in focus is on the back of the Q1 numbers that the company reported. A decent set of numbers that has actually come in from the company in Q1 FY24. Very high and robust base was there in Q1 FY23 on account of the power crisis during May and June 2022. And hence, optically, it looked like the results were negative, but there was no bad number that has actually come in from the company. It's a decent set of numbers that was reported by the company in terms of when you look at the margins. Also, we are seeing an expansion of around 480 basis points. Lower under recoveries is something that is driving the growth for the company as well. And overall, yes, in terms of when you look at it, the lower generation came in down around 1.9%, coupled with margin fall in tariff. That was something that was impacting overall in terms of the revenues of the company. But all in all, yes, the numbers are not looking bad. They are optically looking good as well. And also, the company has high profits coal mining segment as well into 100% new subsidiary and on a book value basis by the end of FY23. So let's keep an eye out on this news flow and update that we've been getting in on NTPC. As of now, on the back of numbers, we are seeing the stock is up almost 3.5%.
All right, we will be keeping an eye out on that counter, NTPC. But moving on, then another counter that is in focus is Siemens India. Now, Siemens India is up almost 3% in trade. Now it had risen to 5.5% to its highest level on record, as the company said that the shareholders have rejected the proposed sale of its low voltage motor division. Now the trading, it also implied that the loss to the shareholders from the deal was going to be 189 rupees per share, as the proposed sale value was at an enterprise value to sale of 2.1 times versus the company multiple of 8.4 times. Now Jefferies also came out with a note on this, and they said that the deal required majority of the minority shareholders to be approved, as the regulatory guidelines said that any adverse change to the construct of the India business will be a big negative, while the materially higher prices are going to be a positive. And on the back of the news flow, the stock is up almost 3% in trade.
Is Siemens for y'all, but let's pull up the charts for WellSpan India. That's just reporting its numbers right now, and I'm going to pull up the charts. I'm going to pull up the numbers also on BSE, how they're looking like. As of now, the first cut what we're picking up is seems like the revenue has seen a sharp growth. 2,184 crores is what the revenue has come in at, and profits have come in at 162 crores versus just 22 crores last year. More details are something that we're obviously watching out for. I'm just going to be opening the release as well in terms of what we're seeing coming in over there, but seems like what numbers we're picking up, 2,184 in terms of revenue versus 1,954 crores last year. A sharp jump and spike up. Look at it, that has come in the numbers of the company as well, and look at the jump. When you look at it in terms of the profitability of the company, margins of the company, margins have come in at 15.4% versus just 8.8% last year. So very, very strong set of numbers seems like that has come in from the company in terms of both the operating performance, even the top line and the bottom line. Both these have seen a very strong growth, and that is why meriting that sharp jump up and continuing to see that up move as well. Trading at the day's highest point as of now as well. 9% uptick in the stock as of now. What we're seeing coming in, more internals in terms of the demand trends is something that obviously we'll be watching out for in terms of commentary. But yes, as of now, strong set of numbers is what it looks like is coming from a WellSpan.
All right, then strong set of numbers coming in there for WellSpan, and clearly we see the movement in the stock prices. Vinny, we will be getting you more updates on that. But for now, Vinny and I will take your leave. Thank you so much for tuning in for Market Fatafat. Don't go anywhere. There's lots more coming up on the other side.